Good morning. It's Tuesday, January 16th, 2024. I'm Jared Hall, financial advisor and partner at Harvest Investment Strategies. This is the week ahead, where each Monday we update our clients and network with a video that could be to update them on what could be impacting financial markets during the week. This week's video is actually taking place on Tuesday morning, as the U.S. stock market and banks were closed on Monday in observance of Martin Luther King Jr. Day. Before touching on the events of this week, let's unpack last week's market action. The S&P 500 index bounced back 1.8% last week, reversing a choppy start to the new year and putting it back into positive territory for the year. Last week, the market was digesting the CPI and the PPI inflationary readouts, which were actually conflicting relative to one another. The CPI consumer portion of the inflation readout was slightly higher than estimates, causing several Federal Reserve governors to add some caution to their tone in regards to the possibilities of a rate cut coming as early as March. Later in the week, the PPI, producer counterpart to the CPI, came in better than expected, meaning inflation continued to come down. The PPI readout seemed to help the market indexes gain more positive momentum and close out the week higher. While we appreciate a market bound for higher prices, the appreciation in the market since Halloween, in tandem with rising geopolitical angst, or just the rising geopolitical angst that's unfolded during this same period, is causing our team to be more cautious than the overall market sentiment. We recognize the positive winds that are pushing the markets higher, such as inflation tapering down, interest rates not drifting any higher, strong employment readouts, a wave of artificial intelligence, etc. But we also recognize some yellow flashing lights in the distance, such as conflict in the Middle East between Israel and Hamas, a lingering Russian-Ukraine war, the Houthi rebels, which have been attacking the Suez Canal, which is a main trading canal for much of Europe and Asia, and a general election cycle in the U.S., not to mention a federal deficit whose debt service payments are alone in excess of some of the most important line items. In summary, we would urge everyone not to succumb to the emotions of FOMO in regards to the market moving higher recently. Looking ahead to this week, the markets will be digesting releases in retail sales data, industrial production, and data on the U.S. housing market and the number of housing starts. We think all of the three of these, the most important issue to watch is retail sales. The U.S. consumer was able to carry the economy on its back in 2023, but if the consumer can continue to pull the weight of the economy in 2024, actually remains to be seen. That's all for this week. Thanks for watching.